Hello traders, Gary Wagner here. Approximately 11 a.m. in Honolulu, 5 o'clock in New York City. It is Tuesday, the 5th day of June 2012, and this is the daily report for gold and silver. Fairly quiet day in the market for the precious metals. I'm speaking about gold. We'll get to silver in just a second. It's currently trading off about $1 on the day. It's been about $1 higher to $1 lower. As you can see, current print is 617, 616.82 with a low of 1610.50, high 1623.60. Silver showing a little bit of spark today, a little bit of white glistening, I should say, up about 27 cents on the day. As you can see, we're looking at 28.46 with a high of 28.69 and a low of 28.04. Traders, I want to start the show this morning by talking about two simple factors in the gold market, technically based, of course. This is support and resistance, because I can clearly pinpoint what I believe to be a pretty critical support area, and we're also right now looking at a resistance area as I believe gold forms a base in this area before moving higher. We took a look at this chart, I believe, back about a week ago, and we talked about the fact that really we saw some good technical evidence that we might in fact be taking a look at a double bottom. It's actually a triple bottom if we take it back a little bit further. But as you can see, this area just above 1520 was an area that has been tested and has been shown to find on a technical basis good support. Now, what does that mean on a technical basis? Well, fundamentally, it says that when the market gets down there, you have profit taking from anyone who's short, but more importantly, you have buying the dip mentality, bargain hunting, and that re-enters the market because at that point, the belief by many investors is that the market is in fact oversold. It's been coming down too much, too hard, too fast, and they believe that it is a good value. You can see that here. The market comes down, tests this area, it goes up, it cannot hold and can't breach the $1,600 mark, which psychologically is a resistance area. So it comes back down and tests it a secondary time. When it comes back up, of course, it can't breach that. You have that lower high, a compression, and then if you look at the low right in here, you get that once again. I believe this was about 1532. Now, of course, we only tested that this one time. If you recall, this is a secondary top. We're looking at a 720-minute candlestick chart. So this is a secondary top. In other words, the market's at 1920, record high, comes down and makes this low right in here. When it comes back up, this is a secondary high, 1802. That's going to be a number that I think is going to be a critical number to break because as you can see, we've got good historical technical data that suggests that might be the case. However, prior to that happening, we want to take a look at another area as this market forms a base. To do that, we are going to look at the cash market, gold. We are also going to be looking at a weekly chart. We can do it with the daily, but with the weekly, the reason that I'm putting it up, it gives us so much more historical data. And when you consider this weekly, we're looking at the market running from 2008 up to the present time, hits its top at 1920. Here you can see a lot clearer, I believe, what we have labeled as this triple bottom in here. And that, in fact, appears as though it did hold. This is, you can see 3 attempts to breach it, but in each case, the market is brought back up. That being the third, the second, and this being the first testing of this low after the market reached its, of course, record top and came down. Now, resistance is what we want to talk about now because we can say with some certainty on a technical basis that we have pretty good support in this area. It is my belief that as this market moves up, it's going to have to form a base. It's going to find resistance at certain areas. If you take a look at this support level, the bottom of these markets, what you'll notice is that the market right now, 1618.81, call it 1619, so it's up about $1 now. It was down about $1 when we started the show. But as you can see, 1623 on a technical basis is a 23% retracement from this tremendous rally, this multi-year rally, and you can see that this 23% resistance level, I don't believe is going to be insurmountable, but you can clearly see that we have run into a little bit of resistance right in this area. As on the week, this was the close. I believe it hit 29 or 32 for a high. And right now, it's just below that, but it opened right at that point. And as you can see, at least on a tentative basis, at least for now, we do have a little bit of resistance sitting here at 1623. 2847, up a little bit. But the one thing that I think we're going to see, and this is what we'll have to determine as we move forward, and if this market moves up, is probably a little bit of resistance just above $29, $29.34. This is the 23% retracement level from these highs at about 37 down to 27, this $10 move. And I think that this is going to be the first level. If we do find some sort of resistance as this market begins to trade higher, I think that that's where we're going to find it. Also, because silver has been really trading in a consolidated range, I would look at this particular pocket right in here, 2681 low, 2935 high, to be a range-bound market. This is the range I believe it will trade in. So we do have a position. It is in profits. If it does continue to move higher, this is the area we'll probably look to pull profits or at least tighten our stops. Traders, from yesterday's report, you know that we did raise those stops. Keep them there. Let's see how this trade works out. So far, it seems to be working out quite fine for us. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow on Wednesday for another daily update and review. Bye-bye.